So in terms of the recording, what we normally do is that after our workshops, we create clips for our workshops and we upload them to our accounts like Instagram and Facebook, but also we do have a YouTube channel. So if you guys are looking to look back at the workshop that we had for today, you guys can look to our YouTube channel for more information in regards to that.
Danielle, a quick question. Did everyone on the waitlist get the email as well?
Yes, I sent out like a blast email. There was a lot of people on the wait list, so I sent out a blast email. And if those who maybe didn't get it, I also sent them a personal email with the link.
Okay, thanks.
We're gonna get started soon. We're gonna get started about like 7:05, so we have about 3 more minutes before we start today's session. But thank you guys for joining. Those that are new and just joined, we are going to get started soon. Don't worry, guys, didn't miss anything yet. We're going to get started in about 2 minutes. If you know your friends that may be late, let them know to hop on now. You guys are engaging the chat already. I love it. Keep up this energy, please, for today's entire workshop. I love it.
Best in it. It has to give you.
And just please keep in mind for today's session, please remain mute unless you guys are asking a question and you guys are called upon.
So what I would say is
All right, so I am going to get started. So welcome everyone. My name is Danielle and I will be your facilitator for today. Today we're going to cover how to invest in the stock market. This is on behalf of the Discover Your Path program brought to you by Skills for Life. So we're going to start off our workshop today with an icebreaker. So let's see how much you guys really know about investing or if you guys know any terminology. So we're going to start by answering, there's only 2 questions. So let's see how much you guys know. So for my first question, it might be a little hard, maybe you guys know it, but fill in the blank. Blank is based on tips, rumors, and hunches, unplanned and without knowledge of the exact nature of the risk. Is it A? Is it B? Is it C? Or is it D? If you guys do not know any terminologies following, you guys are free to guess as well.
progress.
Okay, I see C, A, C. Guessing A, A. Okay, I see a lot of people putting A. I see someone put C. C, D, C. Okay. Well, let's see who's right. So the answer is actually C. So those who got C, you guys are honestly already way far ahead. So great job. Hopefully everyone else can get the next question. I think this one is maybe a little bit more straightforward. So employment of funds with the aim of achieving additional income is known as A, B, C or is it D? Let's see what you guys think. A, okay. This is good. A, awesome. I feel like everyone is more familiar with this one. So the answer for this question is A, it's an investment. So those of you who answered both the first question and the second question right, you guys both deserve a pat on your back. That is great, guys. Thank you guys for engaging, doing a little quick icebreaker, and that is kind of a wrap for that. Now we're going to jump into a pre-survey in which I'll have you guys answer some short questions. So what I'm going to have you guys do is, whether you guys have your phones or your tablets, can you guys please head to the website called menti.com and put in the following code: 16925063. So I'll repeat it again. Head to the website menti.com and put in the following code: 16925063. And we're going to do a quick survey. I kind of want to learn about maybe the demographic for today and kind of see who's attending today's workshop. So my first question for you guys is, what is your age? Are you guys from the age of 15 to 20, 21 to 25, 26 to 30, 31 and up? What is the age range for today's workshop? And I see that's been put into the chat. We have attached the website menti.com as well as the code. So please do join and submit your answers. So what is your age? Seems like a lot of people are between the age of 21 and 25. So am I. I know I look extremely young, but I am 25. I just make the cusp at the end. But thank you all for joining. It looks like we have a really good mix of a group today. So thank you for attending today's workshop. So what I want to know now is, where are you guys joining us from? Are you guys here from Brampton, Mississauga, Toronto? Are you guys here from maybe Africa or India, the States? We've had a lot of people from all over the world before, so I kind of want to hear, where are you guys joining us from? Okay, wow. Okay, we have Toronto, we have Kitchener, we have Nigeria, we have Montreal, Pickering, London, Brampton, Edmonton. Okay, we have a really good group and demographic today. Looks like you guys are kind of from just about everywhere. In Nigeria? That is far. Wow. Thank you for joining us. Looks like you guys are just about from everywhere. My next question: how did you guys actually hear about this workshop? Did you guys hear about it from a friend, a really good friend, Twitter, Facebook, Instagram, email? How did you guys actually hear about today's workshop? I am curious. Okay, a lot of people heard about it from Instagram, so that is great. Please do follow us on Instagram. We'll attach our links to our social media within the chat as well, so you can connect with us for future workshops as well as events that might be coming up. And then for my second last question, have you guys actually attended a Skills 5 workshop before? Like, it's our first time meeting? Have you guys come to one before? And if it's not, if this is your first time, welcome. Hopefully this is not your last time that you're coming, and hopefully we see you guys again at our future workshops. A lot of people said no. Wow. Well, hopefully you guys do come to our future workshops. We do have another one coming up in October 25th. So I will share that in the chat as well towards the end if you guys want to register for that workshop as well. And then finally, what is something that you guys hope to learn today? What is a takeaway that you guys want from today's workshop? What's something that's important that you want to learn? Maybe you want to learn specifically how to invest in the market, maybe how to someone put minimal risks. What are things that you guys want to primarily learn, have a good takeaway from today's workshop? I want to know, let me know. So views on how to make money, how to expand the stock market investment, basic knowledge on how to invest in stock markets, tips to get started, multiple streams of investment. These are all great topics, and hopefully we cover a lot of them today. how to earn money, work for me, Reni's investment portfolio, basic knowledge about bonds. So there's a lot that you guys put out there. So hopefully there's a lot that we can cover today. And if not, hopefully you guys can learn it in the next workshop that we'll have at the end of the month, which is going to cover a more advanced version on how to invest into the stock market. And remember, if you guys are on mute, please mute yourself during today's workshop unless you guys are asking a question. So that is the end for our survey. And we're going to continue with the presentation for today.
Okay, hi everybody. Am I good to go, Daniel?
I'm just gonna play a video, but if you want, you can go. You can go
No,
ahead.
go ahead. Sorry, I thought it was my turn. You go ahead.
Oh, no worries. I'm gonna play a quick video, just introduce the topic, and then you are free to go. No worries. So 1 second, I'm gonna quickly just play a quick video to introduce the topic for today, and then Reni is free to go and present for today. So this video is going to introduce our topic for today, which is how to invest in the stock market and kind of a little about how it works.
In the 1600s, the Dutch East India Company employed hundreds of ships to trade gold, porcelain, spices, and silks around the globe. But running this massive operation wasn't cheap. In order to fund their expensive voyages, the company turned to private citizens, individuals who could invest money to support the trip in exchange for a share of the ship's profits. This practice allowed the company to afford even grander voyages, increasing profits for both themselves and their savvy investors. Selling these shares in coffee houses and shipping ports across the continent, the Dutch East India Company unknowingly invented the world's first stock market. Since then, companies have been collecting funds from willing investors to support all kinds of businesses. And today, the stock market has schools, careers, and even whole television channels dedicated to understanding it. But the modern stock market is significantly more complicated than its original incarnation. So how do companies and investors use the market today? Let's imagine a new coffee company that decides to launch on the market. First, the company will advertise itself to big investors. If they think the company is a good idea, they get the first crack at investing and then sponsor the company's initial public offering, or IPO. This launches the company onto the official public market, where any company or individual who believes the business could be profitable might buy a stock. Buying stocks makes those investors partial owners in the business. Their investment helps the company to grow, and as it becomes more successful, more buyers may see potential and start buying stocks. As demand for those stocks increases, so does their price, increasing the cost for prospective buyers and raising the value of the company's stocks people already own. For the company, this increased interest helps fund new initiatives and also boosts its overall market value by showing how many people are willing to invest in their idea. However, if for some reason a company starts to seem less profitable, the reverse can also happen.
That was a little quick video giving you a little introduction to today's topic, which is investing in the stock market, and kind of told you guys a little bit about how the stock market works. So for today, I'm going to introduce our guest speaker very quickly before she hops on and shares her information for today. So we have Reni, known as Reni the Resource. She's a content creator, marketing consultant, and a finance educator based in Toronto, Ontario. On her YouTube channel, she shares resources around her career development and financial literacy. So without further ado, I'm going to unshare my screen, and then Reni, you're free to go ahead and start your presentation for today.
Thank you for having me. Okay, let's see. Let's share the screen. Okay, can we all see my screen?
Yep, we're all good.
Perfect. Okay, hi everyone. I hope you're having a great night. I know a lot of people joined from Nigeria, so just want to say I'm super grateful to you all for joining. This will be really Canadian focused, but I'll try to add a little sprinkle to help those in Nigeria as well. So just to introduce myself, my name is Reni, and I am a marketing consultant and a finance educator. I actually bought my first house at the age of 23 back in 2020. And I bought this house by investing in the stock market. I have been investing in the stock market since I was 18 years old. Now I am 27 years old. So it's been a long journey of investing, and it's something I think every single person should do. So I'm really grateful for the opportunity to teach you all about it. I do have a YouTube channel, an Instagram page, a TikTok, a Twitter, literally all the platforms where I teach people about these different topics. And I have a whole investing 101 playlist. Because this is a short session, I can't go in depth about everything. So I will leave my links in the chat, and you can connect with me on all of those platforms where I share more information about the topic that I will speak about today. And a big thank you to Skills for Life for having me. I really appreciate the opportunity to speak to you all. So today we're going to go through a few things. We're going to go through what is investing, the benefits of investing, what is the stock market that we hear of often, where do we invest, how do we invest, and then what do you actually buy when you want to invest. If you are a beginner or if you just started investing, this is probably the right session for you. If you are a bit more advanced, this may be pretty beginner for you, but again, feel free to leave any questions that you have in the chat, and I will make sure to answer them for you. Also, Sonia mentioned the chat. I have a podcast called Don't Go Broke Trying, and I have a great episode on how to not go broke trying to invest in the stock market. So there's a lot of information out there for you to listen to and watch. So we're just going to go back to last session that I had with Skills for Life. And this is where we really discussed the different types of people that there are in this world. So, and I also want to know that I like this to be an interactive session. Last time it was so interactive. So feel free to, talk in the chat, ask any questions that you like. It makes me feel great, and it makes the session even better. So there are 4 types of people in this world, and we all exist on this quadrant that we call the cash flow quadrant. So there's somebody who is an E, who is an employee, which means that you have a job. So maybe you go to your 9 to 5 or your shift work, and you work those hours and you work at your job. There's also B, a business owner, which means that you have a business that works for you and systems that work for you. There's also those who are S, self-employed, and that would be someone like me, where I work for myself, but it means that I own a job. If I did not work, I would not get paid. So right now I have a system that, it's not really a system yet because I'm not getting paid if I don't work. But there's also B again, which is where you have a system that works for you. So I could go on vacation for 3 months and the money would still keep flowing. That's where I'm trying to get to. And then we also have I, investor, and this is where your money works for you. So let me know in the chat, which place do you currently think that you are right now? What's going on with the screen? My screen is frozen. Give me 1 second. My screen is frozen. Okay, perfect. So let me know where you currently exist. I'm seeing a lot of answers. People are saying A, trying to get to B. Some people are E. Okay, I see a good mixture. Yes, and the goal for this session is that you all get to become I, and in addition to whatever you are. So you can be self-employed and an investor. You can have a business and be an investor. So you don't just have to be one, you can be multiple. And I want you to know that you can become an investor. I'm going to show you one of the easiest ways to become an investor so that your money is constantly making money and working for you. And the reason we want this, by the way, is so that, we do not have to work and slave away for the rest of our lives. Instead, we have our money that is making money for us while we sleep. So maybe I'll share my story just to, get us into it. I have been investing, as I said, since I was 18 in 2014. And I was very fortunate to have parents who taught me about financial literacy from a very young age. So when I was 18, they were like, Reni, it's time for you to start investing in the stock market. And I was like, okay, let's do it. So when I was 18, I purchased my first stocks. And these were stocks of a bank here in Canada that I purchased. And, it was just $100 that I was able to put into these stocks. And that started my investing journey. Then the next year, I was in my second year of university, and I got my first like retail job working at Payless shoe stores. And this was where I was working about like 20 to 30 hours a week, and I was getting paid $9 an hour. So I wasn't getting paid very much. That was minimum wage at the time, but my parents were like, you're not paying rent here, so you need to start investing and putting a lot of your money towards investing. So I would put about 200 to 250 to 300, depending on the week and how much I work. I would put that money towards my investments. And I was buying different companies, and I was buying like the bank stocks, some tech stocks, and there's this company called Shopify that I bought at this time. I'm sure many of you have heard of the company called Shopify. And yeah, shout out to knowledgeable parents for real. I bought Shopify at that time, and it was about $200 at the time that Shopify was. So I put my money in there, and every 2 weeks I was buying Shopify, buying a little bit more. And of course, I didn't have much money, right? It was about $200 to $250 to $300 that I could put every few weeks, but I did it. I would buy one share. And by the time I was 23 years old in 2020, my portfolio had grown to $60,000, meaning that because Shopify had gone from $200 per share to $1,200 per share. So that's a $1,000 growth just from holding the shares. And I had a lot of them. So my portfolio was not just Shopify, but Shopify plus the other stocks I had grew to $60,000. Then I used that money, and I used that money to purchase my first house. So I cashed out my tax-free savings account, and I sold my stocks, and I bought my first house. And that's really started my journey of educating other people about financial literacy. And then by 2023, we are here now. I have rebuilt my portfolio because I'm making more money than I ever have. So I can invest more money than I ever have. And now I have about like a $200,000 investment portfolio that excludes the value of my house. So I am really trying to build generational wealth. I'm really trying to make my money work for me. And every single day or every single month, I get notifications that I am making more and more money. And it's not that I'm working any harder than before. It's more so that I have put my money to work so that I am continuously making more and more money. And yes, I think somebody asked in the chat, what platform did I use? I'll definitely get into it. At the time, I was using TD Direct Investing. That's the platform that I started off with in 2014. And I still use them to today. I also use Wealth Simple. But I'll get into that. And thank you, everyone. I appreciate the love in the comments. So I shared all of that, not to brag about or anything. I mostly share this to inspire you and know that you can start with very little amounts. You can even start with $1 at this point. And yeah, you can start with $1 at this with different platforms that we have available right now, and it can grow over time. So I will get into that a bit more. And Ade asked, would I say that 200,000 was built from 2020 to date? So I did have a little bit in my RRSP. So I had about like 10,000 or 20,000, but yes, the majority has been built in the last 3 years, the 200,000. And it's because I've been very intentional about investing in the stock market for the last 3 years. I invest usually like $5,000 a month because I'm making more money than I've ever made before. So I'm investing a lot of money into my portfolio. So yeah. Yes, I'm very transparent. Follow me on Instagram if you want more transparency. Okay, so now we're going to get into what is investing. Can anybody tell me what they think investing is? You can leave it in the chat. Just share what you think investing is. And if you are unmuted, please mute yourself. I think I can hear somebody talking. But yeah, what is investing to you? Okay, Kyra says growing your money. Sarah says making your money work for you. I like that.
Yeah, sure.
Anybody else? What is investing to you? There's no wrong answer here. Just share what you think. Starting your own business. Yes, investing increases your money. Yes, correct. Okay, I think those are all great answers. Yes, and Victoria, making money while I sleep. I think that's the goal for most of us. To me, investing is expending money with the expectation of achieving a profit. I think the profit part is very important because some people are putting money different places But the goal should be to make a profit. It shouldn't just to put your money in something for fun, right? We are trying to make a profit when we are investing. Another way I like to put it is investing is putting your money to work today in order to increase its value over time. So again, I'm putting it in an asset. And I know somebody mentioned a business. You can invest in a business, you can invest in people, you can invest in yourself, you can invest in the stock market. There's so many different ways to invest. Can anyone share other places that you think you can invest, or different things you can invest in? So an example would be stocks. Anything else that you know that we can invest in? Or that you have heard? Okay, perfect. Real estate, yes. I think that's a really common one, especially in Canada. Our real estate market is everything to us. Mutual funds, GICs, government bonds, land, index fund. Okay, you all are very advanced. Usually people don't know, so I'm glad to hear that you all know. So some examples, as you all mentioned, would be bonds, Forex, which is foreign exchange currencies, stocks. We also have options. We also have cryptocurrency, and we also have real estate. These are just some. There are definitely more ways to invest, for example, like a business, but these are a lot of the main ways that we hear investing. I'm sure a lot of you are beginners. So because you are beginners, I would tell you to avoid these three: Forex, crypto, and options. Personally, I just think that they are ones that we shouldn't touch if we are beginners. And this is not to say that you can't make money in Forex or crypto or with options, but they are more advanced strategies, and they are also more risky, especially cryptocurrency. It is a pretty risky strategy to start off with. And I don't want you to lose your money before you even know how to invest, because a lot of people jump to crypto and Forex and then they lose money, and then they just don't believe in investing anymore. So I would tell you to start off with something like stocks. You can invest in bonds and real estate, but I think stocks honestly are the most easy to understand, and that's why I'm going to spend my time today talking about stocks. Stocks are also the way that is the method of investing that is the most accessible, because as I said before, you can start with $1 only. So that makes it a lot more accessible than real estate, for example, where you would need a lot more money to actually get into the real estate market. So now let's get into some of the benefits of investing. One of the real benefits of investing is that it allows you to have multiple streams of income. And if you were here in the last session, you know that I spoke about having multiple streams of income and how I personally have about 7 or 8 different streams of income, which allow me to, again, make money while I sleep. So that, okay, somebody's unmuted. If you could just mute yourself, please. Somebody's talking and I'm muted. Thank you. Okay, so yeah, as I was saying, it allows you to have multiple streams of income and make your money work for you even while you are sleeping. And it also just gives you options, because if you think about it, if you have all your eggs in one basket and you are focused on, you know, your 9 to 5, and all your income is coming from your 9 to 5, if anything happens to your 9 to 5, then you've lost all your streams of income, which is pretty risky. Or if you want to leave, you know, your 9 to 5, you cannot leave until you get another stream of income to replace it. So it makes it very hard. One of the reasons I was able to leave my 9 to 5 and pursue content creation was because I had multiple streams of income, like my investment portfolio, my real estate portfolio, and also I had investments that I made while I was working that gave me a nest egg of $30,000, which allowed me to leave the company. So there are lots of reasons why you should leave. Namely, from investing. Investing can give you 2 main streams of income. So it can give you capital gains, and capital gains is when you buy a stock. So say you buy a stock for $100 and it grows to $120. You just made $20 by doing absolutely nothing but holding your stock. And imagine if you have 100 of those stocks, that means you have made a lot more money. So this is one of the first ways that you can make money, and one of the first streams of income that you get from investing. And the second way is dividend income. So dividend income, I think this is very sweet income. It's very passive. I really love it. And this is money that you get as a return on the shares that you own of a company. So if you own that share that I was talking about, that is $100, and they, for example, pay a dividend of $1 per share, now you are just paid money just because you own that share. And I think that's pretty great. If you follow me on Instagram, you know that I post some of the dividends that I've been making. This just came this weekend, and at 4:27 a.m., while I was sound asleep in my bed, I received this message that said that I made $41 from a dividend of this ETF that I own, or a stock that I own. And that's great. I think who would like, in the comments, let me know if you would like to just make $42 just by, sitting in just by sleeping and not doing anything, right? And I bought these before. Exactly. Yeah, we all want that. I bought these like before, and every quarter I get paid just because I own this ETF. So I'm going to talk a little bit about these ETFs in a bit. Yay, I'm glad for you, Karen. You gained dividends. Nice. Yeah, we can all get into this. And hopefully by the end of this, you will be able to purchase one of these dividends and buy your own so you can start making money while you sleep. Another reason why we should invest is to get higher returns than a savings account. So I think this one is key. Like, if I always tell people that you cannot save yourself to wealth. You cannot, save $1 million. You could technically save $1 million, but it would take so much longer than it would take to just invest and grow it to $1 million. Also, there's this thing called inflation that I'm sure we all know, where the value of our money is decreasing day by day. And oftentimes our money is losing value so quickly that we can't save quickly enough to combat that. So investing lets you get higher returns. So if we look at two separate people, Tolu and Lara, these are two people. And if we look at them, say they both are the same exact age and they both put $500 per month towards their towards saving and to investing. Let's say Tolu saves $500 per month, and Tolu will put it in a high interest savings account, and that account will pay her a 2% interest rate. Of course, there are some that pay 4% right now, some that pay 0.5% right now, but we'll just use 2% to be a good average. Let's say every month, Tolu puts $500 towards that high interest savings account. Then we have Lara, on the other hand, who is like me, who is going to say, okay, I want to try something different, and I'm going to put $500 a month into stocks. I'm going to put it in the stock market and see it grow. If we see the average returns that we see on an annual basis in the stock market is about 7%. And this is like a conservative estimate. Most people say 10%, but I'm going to use a conservative estimate of 7%. This means that over time, 40 years later, if Tolu puts it that $500 for 40 years, she will have $367,000 over after 40 years. That's great. To be honest, like obviously $367,000 is obviously better than $0. But Lara's doing the exact same thing, except she's taking a step further and buying a stock, right? Lara will have a growth of, or she'll have a total of $1.3 million by the end of this. So which would you rather have? Would you rather be Tolu or would you rather be Lara in this situation? Let me know. Let me know in the chat. Yeah, exactly. I think everybody would rather be Lara because she just put her money, and again, it's pretty much the same amount of effort, but they're just buying. So she's just buying an investment rather than letting her money stay. And this does not account for inflation. So Tolu's, both of their money would be worth a little bit less because of inflation, of course. But again, Lara was able to beat inflation, whereas Tolu, her money's worth less than it was before. So that is why. Hi, somebody is unmuted. Can you please mute yourself? Thank you. So yeah. As all of you said, I would rather be Lara than Tolu in this situation. So I would just highly recommend that you start putting your money towards investing. The last reason, and there are many more, but the last reason I'll mention why you should invest is to make money where you spend money. So I don't know about you, but I love me some Apple products, okay? I have my Apple Watch, I have my iPhone, I'm talking to you on my iMac, I even have my MacBook Pro right here. I have my AirPods right here. I love Apple products. And one day my dad was like, Reni, you buy so many Apple products. Are you also a shareholder in Apple? And I was like, that is a good question. So then I started to buy Apple stocks. And now I am able to experience anytime Apple is making money, I am also making money in my portfolio. So it's just a way that you can also not just become a consumer, but also be an investor in the companies that you shop at. And this is not to say that every single company you shop at is a good company. By the way, not all of them are, and not all of them are profitable. But after doing some research, I realized that Apple was a company that made sense for me at the time when I started investing in it. Okay, so now let's get into the stock market. Who here would say that they know what the stock market is? Maybe like, just let me know yes or no if you know what the stock market is. Maybe you've heard of it. Maybe you know in detail what it is. Let me know if you know. Yes, no. Okay, Antoinette knows. Okay. No, I said no. Aredo knows somewhat. Okay, so I feel like Jarasimi's her response is pretty accurate for what most people are like. Like they know a bit about what it is, but they don't know too much. So that's great. I'm glad that you're here so I can explain. So what the stock market is, in very simple terms, is a place where investors buy and sell shares of companies. And when you are part of the stock market and you all become investors, like I want you to become by the end of this session, you will become a part owner in that company that you all purchase a share. So let me break it down even further, because I think this can even though it's a bit simple, it can be a little complicated. So let's think of the stock market like a mall. Here in Mississauga, where I live, there is a mall called Square One. Sure, many of you have heard of it. If you haven't, it is one of the largest malls here that we have. And at a mall, you have obviously different stores that are in this mall. Square One, or any mall, is similar to it's a brokerage. And a brokerage is where you would go and buy your stocks. So this would be a company in Canada like Wealthsimple, TD Direct Investing, CIBC Investor Edge. These would be where you would go and buy the stocks, okay? So if you think of a mall, there are a bunch of different stores there, right? And I cannot access these stores unless Square One itself is open to allow me into it. So Square One determines the hours of operation, and they're basically my access to the stores that are inside the mall. Again, this is similar to the brokerage, where it's like I cannot purchase any stocks on the stock exchange unless the brokerage gives me access to these stores. So I hope that was clear. That is the first level of the stock market. If you are in Nigeria, there are other platforms, and you can use something like Trove or Chaka or Bamboo. These are different brokerages that you would find in Nigeria. And if there are any more, please feel free to leave them in the chat. But in Canada, examples, Wealthsimple, Questrade, and any of your banks, major banks in Canada, they will have an investment brokerage that is attached to their platform. And Tony said RiseVest, that's another example as well. Then if we look at the mall, in the mall that you go to, there will be different sections of the mall, right? Different areas of the mall. There will be the food court where you would go and purchase food. Maybe they have a grocery section where they'll have like the Walmart and the Costco or whatever type of store that they have for groceries. And then there may be a luxury section of that mall, where this is where you would go and you would get your Louis Vuitton or any of the more fancy areas of the mall. Some malls are set up like this. This is similar to the investing vehicles or the accounts that you would find in the stock or in the brokerage. So this would be, for example, the TFSA, the tax-free savings account, or the RRSP, the Registered Retirement Savings Plan, or the RESP, the Registered Education Savings Plan. And what this means is that you are able to go to, the food court, and all of these are different places where you can purchase something, but what you would purchase inside that specific area of the mall will be different than you would purchase within a different area of the mall. So these are just the different accounts that you can find within the mall. The last thing that you need to know is that there are different businesses or stores within those areas in the mall. So this would be, for example, Apple. Like I mentioned earlier, there's an Apple store in the mall. I can go to that mall, that store, and I can purchase Apple, right? Same thing on the stock market. You can go to Apple and you can actually purchase a stock of that company. And this is done in your brokerage account. So I hope this all made sense, but essentially think of the stock market like a flea market where there are a bunch of businesses and you can become a part owner of any of the companies that are listed on that stock exchange. One thing to note as well is that not all companies that you like will be on the stock market. They will not be listed. It's mostly it's only publicly traded companies. So there are a bunch of different publicly traded companies, and this means that they have raised enough money, as the video that we watched before, they've raised enough money where they can go public, and now anybody can become a part owner. So again, think of your favorite stores. Think of your Microsofts, your Costco, Aritzia, Tesla, all these different companies. You can become a part owner, and it's just by going on your brokerage and picking a specific account, like the TFSA, for example, and buying one of these companies within that account. So I hope that made sense. Mitch says, is this through mutual funds? So mutual funds are a type of investment that you can make, but I'll get into that a bit later. And Divine, some of the platforms that you can use to invest in Canada would be Wealthsimple. You can use Questrade. You can use TD Direct Investing, you can use CIBC's platform, you can use RBC's platform. Literally any bank, any of the 5 major banks in Canada, they all have investment platforms. I have a link for Wealthsimple, and Wealthsimple is a platform that you can look into. I'm actually an affiliate of their program, so you'll get like $50 if you use that link to sign up for their account. Okay, the next question that I got was, why do companies need money before going public? So I'm not sure if I understand your question. Why do they need money? Yeah, please explain. Can you expand on your question? Thank you, Shala. And then when we invest, is it part of our TFSA contribution? So yes, it is, and I'll get into that shortly. Okay, so the next part that we'll get into is, where do I invest? So there are lots of platforms that you can invest, like a lot of you asked me. And the first, again, you can either go to your bank or you can go to one of these individual companies like Wealthsimple or Questrade. I personally am a big fan of Wealthsimple for beginners, just because Wealthsimple charges very low fees. And because they charge low fees, they actually charge $0 commissions for trading. So that's one thing that I really like. I think it's better than paying a lot of money. If you're someone who's more advanced, or if it's easier for you, you could just open an account with your bank as well. And TD Direct Investing is a great one that I like and use as well. So maybe you just check out. Okay, so now let's get into the investing vehicles that are available. And this is for those in Canada. If you're based in Nigeria, unfortunately, these accounts are not in Nigeria. So the first thing will be the TFSA, which is the tax-free savings account. So the tax-free savings account, let me know, does anybody here have a TFSA? Let me know by saying yes or no. Yes. Okay. A lot of people do have TFSAs, but I find that a lot of people have TFSAs and they are only investing through, they're only saving through their TFSA. Of course, the name is savings account, so I really understand why you are saving through it, but the reality is that you can actually invest through this account as well. So the great thing about the TFSA is that you can take your money out of it at any time. So you can put your money into the account, it can grow, and then you can take your money out. There's no like rules or regulations about when you can take your money out, which is one of the main benefits of the TFSA. You can purchase stocks in this account. You can purchase ETFs, index funds, bonds, GICs, mutual funds. You can purchase literally anything that you want in this TFSA. And the best thing about this is that when your investment increases, so say you buy an investment for $100 and it increases to $120, normally you would have to pay tax on that $20 that you made, but in your TFSA you don't have to pay any tax. So because in Canada we are taxed on literally everything, I highly recommend that you take advantage of all of the tax-free vehicles that we have available to us. So my suggestion for you all is to maximize your TFSA if you can. And if you do not yet have a TFSA, at the end, I'll teach you how to open one. And there is a yearly contribution limit to your TFSA because they can't just let you, invest all your money, or else super rich people would just invest like all their money in this tax-free vehicle. So there is a limit to it. And you can find out what your limit is by using a TFSA contribution room calculator. So there is a calculator. You can just go on moneysense.com or just Google TFSA contribution room calendar, and it will tell you how you can calculate how much contribution room you currently have in your TFSA. So if I use my age, for example, I was born in 1996, and I've been a resident of Canada since before 2010. If I had contributed $0 to my TFSA, and I've made no withdrawals, then that means my contribution room is $62,500 in my TFSA. So I would highly recommend you all go out and check what your contribution room is right now. You can also go on the CRA website, the Canada Revenue Agency website, and see if you are eligible, or see what your contribution room is right now. Somebody asked, is the TFSA advisable for postgraduate students? Yes. I would honestly say TFSA is the best account that you can open, especially when you are a newcomer to Canada, especially when you're just starting your investing journey. This is the best account. So I would highly recommend this account. Chiamaka says that she earned her first tiny dividend last week. Yay, I'm happy for you. Congratulations. That's exciting. And Karen said, would it be detrimental to have more than 2 to 3 TFSA accounts? So that's a great question. It's not detrimental if you can, manage them. The only thing you need to realize is that your contribution room is across all of your TFSAs. So if you have $62,500, that is your contribution limit. That means across all 3 of your TFSAs, it has to total $62,500. So you don't have $62,500 in each of them, it's across all of them. So just make sure you don't go over your total limit. Darasimi says, what happens to your stocks if you move to a different country which does not support your investment tool? Darasimi, can you explain? I'm guessing if you move to like Nigeria, for example, that doesn't support Wealthsimple, is that what you mean? As long as you're considered maybe explain that, your question further, but as long as you are considered a resident of Canada for tax purposes, you don't have to be physically here, but for tax purposes, if you're a resident of Canada, then you are able to use your TFSA. So yes, I hope that answered your question. Okay, there are a lot of questions about this. Pearl asks, you can't open a TFSA unless you are PR. That's actually not true. A lot of advisors say that, but I have helped dozens, hundreds of people open their TFSA and they're on their student permit. So I would advise that you just open an account with Wealthsimple. You are allowed to, as long as you are a resident of Canada, not permanent resident, but as long as you're a resident of Canada, you're able to open your TFSA. So I think a lot of advisors at the banks are not well trained. So yes, please go and open it with Wealthsimple. I left my link there as well. Remember, you can just open it there. Okay. I'm going to go through the slides, and then if you still have questions, feel free to ask them. I think I'll answer a lot of your questions through the slides. The next thing that we want to get through is the second account, the Registered Retirement Savings Account. So this is the RRSP. It is similar to the TFSA, except this one is tax deferred rather than tax-free. So the good thing about this account is also you can take your money out of the account at any time, but you will pay taxes on it when you do take your money out. So the goal that the reason that the government started this account is because they want you to put your money here, and then they want you to save towards your retirement or invest towards your retirement. So you don't have to rely on the government when it's time for you to retire. You ideally will be 65 when you retire. That's what the government's expecting. And then by that time, because you no longer have a full-time job, your tax rate will be a lot lower than it is right now. So you will pay less taxes than you would right now. So that's really the appeal of the account. Again, you can also purchase the same things you can purchase in your TFSA in this account. And the best part of the RFP is that you the contributions that you make right now actually are tax deductible and help lower your taxable income for this year. So if I put in $10,000 into my RRSP right now, and then I make $100,000 a year, instead of getting taxed on $100,000, I will actually get taxed on $90,000. So this is one of the main benefits of this. I would suggest this account for you if you are somebody who is a high earner. Maybe you make $70,000 or more, then this becomes very advantageous for you. But if you don't make up to that yet, start with your TFSA. That's where I would really encourage you to put your efforts right now. Another good thing, if you work for an employer that matches your contributions to your RRSP, contribute. Rather, no matter what income level you're at, contribute to it, because basically you're getting free money from them, so you might as well contribute. The next account that we have is the FHSA, which is the First Home Savings Account. This is another account that I would suggest if you are looking to purchase your first house. And this is the perfect blend of the TFSA and the RRSP, except the money here must be used to purchase a home in order to be tax-free. So what happens is you put your money in, it results in a tax deduction in the year that you put the money in, and then you can take the money out and it's completely tax-free. So again, it's a perfect combination of those two accounts that I mentioned earlier. And I think it is a great account. And even if you don't end up buying your property, you can still transfer the money to your RRSP and then use it for your retirement. So it's a win-win either way, and I would highly recommend it. For Balanle's question, you do have to use it for your first home, or if you have not lived in a home that you've owned for the last 4 years, then you can also you can also use it for that as well. So for example, I own a home, but I've never lived in the home because I rent it out to tenants, so I can still open an FHSA. So yeah, just a note. Kyra says, can you purchase a houseboat using your FHSA? Good question. I'm not too sure about that one. So I would consult the CRA website and just check there if a houseboat it's considered a boat, a house. It probably is, but maybe just check before you open the account for that. How true is it that you cannot invest with an FHSA? This is not true. I have an FHSA with Wealthsimple, and I do invest through my FHSA. The last account that we have that I'll mention is the RESP, which is the Registered Education Savings Plan. This is another investing vehicle that you can use, but it must be used for post-secondary education in order to get the benefits of it. So you can also purchase all the same things in this account that you could purchase in any of the other accounts. And the great thing is the government will match your contributions up to 20%. So you can use this for your post-secondary education, but most people use it for their kids' post-secondary education. So that's just something to note. And there is a lifetime contribution room of about $50,000. So just make sure that you don't go over the $50,000. You can put $50,000 and grow it to $60,000, $70,000, $80,000, but you cannot put in more than $50,000 into this account. So after learning all of this information, let me know, which one do you think you will open to begin? Will you be opening the TFSA, the RSP, the FHSA, the RESP? Let me know. Yeah, okay. Okay, it seems like most people will be opening the TFSA, and I would agree with you. I would say TFSA or the FHSA are some great ones to open for beginners. If you are a high earner earning more than $70,000 and your company matches it, definitely open an RRSP as well. And again, you can have all of these accounts. Like I have a TFSA, an RRSP, and an FHSA. And right now, because I'm a high earner, it makes most sense to maximize my RRSP. But if you do make less money, it may make more sense to, maximize your TFSA before you move on to your RRSP. Chris, do you have a question? Or are you just on camera? Okay.
I actually didn't realize it came on. But no, I don't have a question. Keep going. You're doing a great job.
Okay, perfect. Next. Oh, RRSP means, Anthony, it means Registered Retirement Savings Plan. Okay, so next we will, I'm sure a lot of you are going to want to go and open these accounts. So I want to let you know that if you decide to go to your bank to open them, I just don't want you to let them push you into opening a mutual fund. Because what happens is you get your TFSA and you tell them you want to open a TFSA and they're like, okay, here's a mutual fund. And there's nothing inherently wrong with the mutual fund. It's just very expensive compared to an ETF or investing in stocks because you're paying someone to manage your investments. And a lot of people, the majority of mutual funds are actually, how would I describe it? They're losing money month over month and year over year. So if you go, I see a few of you say you have a mutual fund. If you go and check, you're probably losing money. So that's just something to note. What I would recommend that you ask them for when you go, if you're going to go to your bank instead of doing it online, just say, hi, I'd like to open a self-directed TFSA for investing. And that is what I would ask you to ask them. That's what I would suggest. Yeah, somebody said they've been losing money. Yeah, I have an accountability group with over 100 people, and the majority of people, when we look at their portfolios, they're losing money month over month. So just, mutual funds are a good way maybe to start investing and get comfortable with it. But the reality is that after fees, you're probably losing a lot of money. You can move your account from a mutual fund to a self-directed account, but it requires you to go there or maybe call them up and ask them to sell it. You just want to, and a lot of times there are huge fees to sell your mutual fund. So sometimes I tell people, keep the mutual fund and just instead of constantly contributing to it going forward, you can instead contribute to your self-directed investing and just keep the mutual fund for now. Or you can cancel it. It just depends on what the fees are. So make sure you check the fees to cancel it or close your mutual fund. Okay, so the next question, sorry, there are a lot of questions. I can't really get to all of them without getting through my slides. Okay, so the next thing we're gonna go through is how do I actually invest? Because I see a lot of you asking that question. The first thing that you have to do is you have to do your research. And when I say research, this is the most important thing. You wanna know what investing account am I gonna open? So we all said TFSA, great. What type of stocks or bonds or mutual funds or ETFs do I want to invest in? And I can't go into depth about this right now, just because it is a very long, drawn out topic, but I do have a YouTube video about this, about how to research stocks that you want to invest in. So definitely check that out. The next thing that you're going to do is you're going to go online to Wealthsimple or Questrade or to your bank online, or go into your local bank branch and just ask them that you want to open an account, probably a TFSA if you're a newbie. And then the third thing that I always suggest, and I think this is where a lot of people make a mistake, is you want to fund your accounts and you want to fund it on a regular basis. So what I do is I know that every 2 weeks, $2,500 is going to come out of my checking account and go into my investing account. It's not something I even think about. It's something that I know is going to happen automatically, right? Whether I like it or not. Most people, what they do is thank you for sharing the video. What most people do is that they will, transfer maybe $500 to begin with, and then they never transfer any more. And then they just wait for that money to grow. While that is a way for your money to grow, it will take a long time. So I would really recommend doing it on a regular basis. Kyra, to start, what I would recommend to start as a percentage would be 10%. If you can afford to do 10% of your biweekly income or your monthly income into an investment account, set it up as a recurring transfer so you don't have to mentally think of it. And so you don't accidentally spend the money. So 10% I think is a good amount to constantly do. And if you can do more, 50%, especially because a lot of us live at home with our parents and maybe you have a lot more disposable income. The more you can invest, the better. And the longer you're in the markets, the better. So I would highly recommend doing as much as you can in a way that is reasonable. Don't invest so much that every single month you can't pay your other bills and then you're going to have to take out of your investment account to pay. That one doesn't make sense, but maybe go through your budget for the month and see how much you can comfortably allocate to investing in the stock market. The next thing to do would be to purchase the investment through your online brokerage account. And then the last thing would be to track the fluctuations of your earnings based on current market value. So this would mean that you go onto your app, whatever app you've decided to open, and you can see if it's increasing in value or if it's decreasing in value. And you want to monitor the growth of your portfolio. It can be like on a monthly basis. You check in on your portfolio to see how it's doing. One thing to note is that you do not lose money until you sell, and you do not gain any money until you sell. So if your stock goes from $100 to $120, you actually haven't gained any money until you sell and get that $20 extra. And if your stock goes from $100 to, let's say, $80, you still haven't lost any money until you sell as well. So that's just something to note. So just an example of a stock. If I look at Apple, for example, this is how I would read this. I know this may seem a little complicated, so I'm going to break down some of the numbers that you should look for when you're looking to purchase a stock, or some of the numbers you should understand when you're looking to purchase a stock. So the first thing would be, the ticker symbol or the name of the stock. This is Apple Inc. So we all know Apple, as I mentioned earlier, and this is on Wealthsimple, by the way, and this shows that this is the company that I am looking to purchase. We also see in that corner there is a fraction sign, and this means that you can buy a fraction of the share. So this company is $179.62 US right now. A lot of us may not have $179 to actually purchase this stock. So what we would do instead is you can buy a fraction of the share, as I mentioned before. And because you can buy a fraction, that means you can buy $1, you can buy $2, you can buy $3 of Apple. You don't have to buy the full share. So this is just to say that you can start where you are. You do not have to have a lot of money. You can just start where you are. The next thing to note is here you can see the growth over time. Sorry, somebody's unmuted. If you could just mute yourself, please. So here you can see the growth over time. So here we can see that over the past day, this stock, Apple, has increased by $1.22 or 0.69% since yesterday, right? You can also look at the very bottom and see that you can change that time period. So you can do 1 day, you can do 1 month, you can do 1 week, you can do 3 months, 1 year, 5 years. And you can basically see the growth of the stock time after time. So this is something that's really helpful to see if, just because something has increased in the past day does not mean that over the past year has been doing well. So you really want to zoom out and see how the stock has actually been doing. Some other things to look at would be something like the ask price. And this means that this is the price that somebody is willing to sell their share to you at. Somebody's willing to sell their share at $179.61. So because you see this, this means that you can offer to bid for this share at $179.61. So I hope this makes sense. Again, I have videos walking you through exactly how to read this chart in detail, so you can check out that video on my YouTube channel. Another thing that you may be interested in knowing about is the volume. The volume is just how many shares are currently selling right now. So 19.18 million shares. That's a lot of shares that are selling. So that's just, something to note. And the last thing that you may want to know is the yield. So this yield is telling us how much the dividend will be. So as I mentioned earlier, I got paid in my sleep just from owning some specific shares, right? This is the yield. So 0.53%, meaning that if I take 0.53% times the price of the share, which is $179, then I will see how much I'm going to get just by owning the share. Even if the share does not increase in price, this is the dividend that's going to be sent to my account. So yeah, that's another thing to note. Okay, lastly, we're going to go into what do you actually buy? And I'm running out of time, unfortunately. What do you actually buy? So for beginners, and I think most of us are beginners here, I know that we can buy stocks. We can buy individual companies. We can buy, different companies that we really like Apple, as I mentioned. But I think for beginners, we should really start with funds. There are these things called index funds and exchange traded funds. And how I like to describe this is like a basket of stocks. So instead of buying just Apple, I am going to buy Apple, Microsoft, Tesla, Costco, all of these stocks together. And why I would like to do this instead of just buying Apple is because if Apple crashes and burns today because the CEO says something nuts and then takes the company in a completely different direction, that means say Apple's $179, it could go to $0, right? So that is something that, you could lose all your money when it comes to that, when you invest in an individual stock. But if I have Apple and Microsoft and Shopify and all these different companies in that fund, it's more unlikely that I will actually lose my money because it is spread out across a bunch of different companies. So that's why you want to look for funds instead of starting with stocks. Stocks are a great part of a portfolio, of course, like individual stocks, great part of a portfolio, but it's not everything. And especially for beginners, I think build up a buffer of great index funds or great exchange traded funds that you can actually invest in so that your portfolio will be stable before you move on to the more risky things like investing in stocks. And the reason, as I mentioned before, is for diversification, especially during a recession, which we are currently in the middle of. You don't want to have all your eggs in that one basket. You want to spread your money across different sectors. You want to invest different types of investments and also different locations. So there are lots of different types of ETFs available, and there honestly are too many that I can mention right now, but there are stock index ETFs and sector ETFs. So for example, sector ETFs would be, let's say, I want to invest in the tech sector, or I want to invest in agriculture, or I want to invest in, groceries. These are different types of sectors that are available. You can say, I want to buy an ETF that has a bunch of stocks from that sector. Or there are the stock index ETFs. These are some of my favorite ones where you are investing in, let's say, the S&P 500, which is the 500 largest companies in the United States. So it's very unlikely that the 500 largest companies in the US are all going to fail. So that's honestly one of my tried, true, tested ones that I invest in every 2 weeks. I like to buy the S&P 500. There's also geographic ETFs. So we are based in Canada. Some of us are based in Nigeria. Some of us in the States. You can invest in a bunch of different countries. I would suggest staying with the main big hitters in the world, like Canada, US. Some people like to invest in Europe, but you can invest in like a total US fund or a total Canada fund and invest in all of the companies in those different countries. So these are a bunch of different examples. I think that Taya asked me what are some examples. So personally, I really like Vanguard. Vanguard is a company that allows you to invest in they have a bunch of different ETFs, and Vanguard is great because it is some of the lowest fees possible out of all of the different platforms that are available. So you can check out Vanguard. They have an ETF for literally everything that you're looking for. They have the world. So if you want to invest in the whole world, you can invest in VT. There will be lower growth. The wider the ETF is, the lower the growth is typically in my experience. But one of my favorites would be the S&P 500. So VOO would be an example of that. The Canadian version is VFV. And those are some of the ones that I invest in on a regular basis. I'll make sure to leave that in the chat so that you all know. But yeah, and you can buy Vanguard on Wealthsimple or any of the other investing platforms. So just type in VFV or VOO on Wealthsimple and you'll be able to find them. Okay, so the last thing I want to leave you with before I end is that you should remember that investing is a long-term thing. It is not 1 year and you're gonna suddenly make a lot of money, maybe not even 2 years, maybe not even 3 years. I always tell people that when you're investing in a company, you really want to have a long-term view and see things, for the long term and say, if I invest this money in this stock, I'm holding it for the next 3, 4, 5, 10 years, whatever it is. Okay, so that's how I tend to look at it, especially during recessions. We see a lot of people selling their stocks because they are low. But the reality is that recessions are when the most millionaires are made because it's going to go up after that, right? The goal of investing is to buy low and sell high and not sell when things are very low. So yeah. Tile, yes, there are US ETFs on Wealthsimple, but they're usually the Canadian version of them. So VOO, there's also the Canadian version, which is VFV. So I would just, on Wealthsimple, since there are conversion charges, I would just buy VFV instead of buying VOO, if that makes sense. And when in doubt, zoom out. So if I look at the S&P 500, which I said was the top 500 companies in the United States, if I look at it over the past 6 months, it's been very rocky. It's not looking too hot. All we see is red. But if I zoom out to the past 5 years, it's gone up 56% over the past 5 years. Tell me what savings account can get you a 56% increase in a 5-year period. I don't know of any, and I don't think there is one that exists. So I would highly recommend that you check out some of these different investments that are out there. And as I said, VFV is an S&P 500 index ETF. So it tracks the S&P 500. It has all those 500 companies within that fund. So you're getting exposure to all these companies by just buying one fund. If we zoom out even further, if we look at the max, the S&P 500 has gone up 2,600% over the lifetime of the S&P 500. So that is pretty amazing, I would say. So yeah, thank you so much for listening. Just to recap, the first thing I want you to do is choose a brokerage that you like. It can be Wealthsimple, it can be with your bank, it can be Questrade, whichever one makes most sense to you. Then open a self-directed TFSA, or if you have a TFSA, it can be an RRSP, it can be a FHSA, whatever you want. Then you can purchase index funds or ETFs and make sure you diversify your portfolio. Don't just put your eggs in one basket. And remember, you want to keep a long-term view. When in doubt, make sure that you zoom out. If you did enjoy the session, I would really appreciate if you took a picture of the screen, post what you learned, post it on LinkedIn, post it on Twitter, post it on Instagram, and tag Skills for Life and tag at XO Reni, just because, you let us know that you really enjoyed the session, and maybe Skills for Life will bring us back for some more. So I hope I answered all your questions. If you do have more questions, feel free to leave them in the chat, but you can connect with me on all of these different platforms. I am active on all of them, and you can also book me for a one-on-one session if you would like to do that. That's another way that you can get in contact with me. So I'll hand it back over to Danielle so that she can lead us to the end.
Thank you so much, Reni, for that workshop.